Welcome to LifoPro's LIFO Q&A. My name is Jamie Leinert. I'm a business development special at LifoPro. I'll be moderating today's 15-minute video session in which I'll present the most common questions we receive about LIFO. We have Bob Richardson with us here today, whom is the VP of LifoPro. He will provide the answers to questions we often receive about LIFO. Feel free to contact us to request a specific topic to be covered. Here are some of the most common questions we've been receiving. Why should companies elect LIFO in 2021?
Thanks for the intro, Jamie. This is a great question. LIFO remains to be the most valuable inventory-related tax savings tool. In 2021, unprecedented inflation has created once-in-a-lifetime tax savings opportunities in a wide range of industries. There's been extreme inflation across the board so far this year. In metals and metal products, there's been 40% year-to-date inflation. In chemicals and allied products, there's been 21% year-to-date inflation. In rubber and plastic products, there's been 18% year-to-date inflation. I've just named a few, but nearly every type of good and industry is seeing either record high or well above average inflation. A quick formula for estimating the potential benefits of electing LIFO is to take the product of a company's prior year and inventory balance and year-to-date inflation rate and multiply that by the result, multiply that result by their combined tax rate. For example, a company with 10 million in prior year inventory, a 10% tax rate, 10% year-to-date inflation, and a 40% tax rate would have $1 million in taxable income reduction and $400,000 of after-tax cash savings from LIFO. The threat of LIFO repeal is minimal. LIFO repeal was excluded from the most recently passed infrastructure bill and is also expected to be excluded from the Build Back Better spending bill. Knowing this, the chances of tax rates increasing and inflation persisting is far higher than the chances of LIFO ever going away. The timing of when to elect LIFO is key since a change is treated prospectively, so it's important to elect LIFO in a period such as 2021 when there's record high inflation being measured.
Thanks, Bob. What are the biggest misconceptions about LIFO?
So there are a lot of misconceptions flowing out there. I'll try to hit the top 4 or 5 because there are so many and we could spend the rest of the day talking about those misconceptions. But one of the biggest ones about LIFO is that the administrative burden and costs of LIFO will outweigh the potential benefits. For companies using dollar value LIFO who manage their LIFO calculations in-house using Excel schedules, LIFO can be very complicated for the following reasons. The inflation calculation can be time intensive. For manufacturers and companies with many unique goods and products lines, the exercise of calculating inflation manually within Excel can be especially complex and time intensive. The LIFO layer and reserve calculations can also be complicated and error prone for the following reasons. For one, in any given year, a totally different set of math steps are required to be used to calculate the LIFO layers and LIFO reserve. This is because the LIFO math steps required are different when there's an increment versus when there's a decrement. Furthermore, companies with multiple LIFO pools, business units, or entities have to manage multiple LIFO calculation. No one-size-fits-all Excel LIFO template or macro exists to automate the LIFO layer and reserve computations. So although LIFO calculations can and often are truly complicated because of the reasons just mentioned, LifoPro's mission is to make being on LIFO as simple as possible. By outsourcing your LIFO calculation to LifoPro, companies can maintain the tax savings of LIFO and avoid the hassle by letting LifoPro do all the work. By licensing the LifoPro software, companies and CPA firms can minimize the amount of time and effort required to maintain LIFO calculations in-house. The cost of either solution is nominal compared to the tax savings achieved from LIFO, and is also a fraction of the cost of other LIFO service providers. As a result, companies can accumulate material long-term tax savings from LIFO with a minimal amount of administrative burden. Another big misconception is that item costs and the physical flow of goods must be tracked on a LIFO basis. Under specific goods or unit LIFO, the value of ending inventory is determined by tracking item costs and the physical flow of goods on a LIFO basis. Although taxpayers are allowed to use unit LIFO, the vast majority of businesses that are on LIFO use what's called dollar value LIFO because it avoids all of the undesirable characteristics of unit LIFO. Under dollar value LIFO, the method used to determine the value of ending inventory is completely decoupled and independent from the method used to track item costs and the physical flow of goods. In other words, item costs and the physical flow of goods are tracked and valued within your accounting system under the same cost flow method used prior to going on LIFO when dollar value LIFO is used. For example, a company who used FIFO prior to adopting dollar value LIFO would continue tracking item costs using FIFO after switching to LIFO. The same can be said for companies using average cost, weighted average cost, or standard cost, and subsequently adopt dollar value LIFO. This is because under dollar value LIFO, a side calculation is made at the end of the year to adjust the value of ending inventory from cost to LIFO. After this side calculation is made, a journal entry is recorded to adjust the cost of goods sold and LIFO reserve balances. Under dollar value LIFO, the only change that's made in your accounting system after adopting LIFO is to add a contra inventory subledger account called the LIFO reserve. This balance sheet account represents the difference between the value of inventory at cost and inventory at LIFO. It's the vehicle for reducing the ending inventory balance, increasing the cost of goods sold, reducing pre-tax income, and generating tax savings from LIFO. To put it another way, under dollar value LIFO, the LIFO reserve balance is never allocated at the item level, and no changes are required in terms of how item costs are valued or how the physical flow of goods are tracked. Another big misconception about LIFO is that management forecasting and planning functions will be severely complicated by using LIFO. A frequent fear of management and cost accountants is that LIFO will impair their abilities to perform essential forecasting and planning functions related to purchasing decisions, sales projections, and forecasted profits. Under dollar value LIFO, this misconception is proven wrong. Management and cost accountants can continue forecasting and planning their purchases, sales, and profits using the cost flow methods that are the most representative of current or projected item costs, such as FIFO, average or standard cost. Under dollar value LIFO, the effect of LIFO is never felt at the item level. So management can rest assured that key internal business decisions related to inventory will remain unaffected and be made using the same historical costing methods. One other misconception related to what we just talked about with forecasting and planning is that gross margins and profit-based incentives will be negatively impacted by implementing LIFO. Although LIFO does affect the balance sheet and income statement, many companies now choose to categorize the change in the LIFO reserve as a selling, general, and administrative expense on the income statement, which prevents it from affecting gross profit. As a result, companies with incentives and bonuses tied to sales and profit margins can effectively avoid LIFO from affecting profit-based compensation. Furthermore, companies often present financial measures such as gross margins, EBITDA, and earnings per share, showing both including and excluding LIFO on their financial statements in order to accommodate financial results to be compared to other companies that don't use LIFO. The last misconception I'll mention is that internal costs must be used to measure LIFO inflation. Although there are legitimate reasons for not wanting to measure price changes using internal costs for LIFO calculations, this misconception ignores the fact that taxpayers are allowed to measure LIFO inflation using externally published government inflation indexes, which is often referred to as the IPIC method, which stands for Inventory Price Index Computation. Under the IPIC method, Bureau of Labor Statistics consumer or producer price index inflation categories are assigned to items and represent the sole source for measuring LIFO inflation. The benefit of using government indexes include the following. External indexes may result in higher inflation being measured than internal indexes because all BLS indexes are based on domestic production. For example, under the use of PPI, surveys are taken from US-based producers based on net domestic sales receipts, which often creates more inflation than imported goods due to the differences of domestic versus outsourced labor and overhead costs. The result of the higher inflation measured from using external indexes is that LIFO will create more tax savings than internal indexes. Also, external indexes are often less volatile than internal indexes since the BLS indexes are measured using surveys of multiple producers. Accordingly, external indexes are based on weighted average of the net revenues submitted by multiple survey respondents. This causes any above and below average price changes to be pooled into a single index, which insulates external index against extreme price changes more so than any single internally calculated inflation index.
Thanks for clearing that up for us. Another question we commonly get is how can companies determine if they are a good LIFO candidate?
LifoPro performs complimentary LIFO election benefit analysis for companies considering LIFO elections. This allows companies to quantify the potential tax savings that could be achieved from electing LIFO. The analysis includes the current year projected tax savings from LIFO, a pro forma LIFO calculation showing the historical inflation that could have occurred over the past 20 years if LIFO were to have been elected at that time, and a How LIFO Works appendix detailing valuable concepts for companies considering LIFO elections. Included with our complimentary analysis is a turnkey outsourcing solutions fee quote. Also, companies can refer to LifoPro's 2021 LIFO Lookout and Top LIFO Candidates Guide. Both our LIFO Election Benefit Analysis Report and a sample version, as well as our Top LIFO Candidates Guide, are available on LifoPro's website. And we've updated those indexes and the Top Candidate Guide to be through October 2021, and we'll continue to update it monthly in December and January following the BLS releasing November and December 21 CPI and PPI.
Lastly, how can companies easily implement LIFO?
Well, for companies that want to get on LIFO, there's typically some involvement with their CPA firms. But with that being said, companies have two choices. They can either do LIFO on their own or do LIFO on their own, possibly with the assistance of their CPA firm, or there is option B, which not enough companies know about, but that's part of the reason why we're doing this Q&A today, Jamie. It's to educate companies considering LIFO elections to the beauty of turnkey outsourcing solutions and the LifoPro software. With LifoPro, we make being on LIFO as pain-free as possible. With our turnkey outsourcing solutions, all aspects of a company's LIFO calculation can be outsourced to LifoPro. including requesting the raw data required to complete the LIFO calculation and organizing the documentation provided by the client. Also, completing the inflation index, LIFO layer, and LIFO reserve calculation, which represent the front and back ends of all dollar value LIFO calculations. Also, maintaining the LIFO permanent files within our LifoPro software and delivering a LifoPro PDF report package that includes comprehensive calculation documentation and all amounts required for financial reporting and tax return purposes. Also, performing interim LIFO estimates and ad hoc projections. We also can include Section 263A UNICAP costs into the LifoPro reports. And also included in turnkey outsourcing solutions can be any LIFO-related accounting method changes after you've elected LIFO, or the preparation of IRS Forms 970, which is required to elect LIFO. Secondly, our second LIFO offering, being the LifoPro software, is available to be licensed by companies and CPA firms. Companies and CPA firms can rest assured knowing that LifoPro will offer comprehensive and affordable solutions for all their LIFO needs, regardless of if it's a first-year LIFO calculation, recurring LIFO calculations, or licensing our LifoPro software.
Thanks so much for your time and insight today, Bob. Please reach out to us here at LifoPro with any questions that you have or to learn more. And thanks for joining our Q&A.
And as Jamie said earlier, please feel free to reach out and contact LifoPro for any further LIFO studies, LIFO insights, or other LIFO video presentations that you would like us to present and prepare for you. And have a good day.
Save the recording.
Well,
Is there a way that I have to end? That's a good question. I don't know if that.